So thank you very much for joining us for this session. We're going to be looking at Latin America and the Caribbean, and how through the experiences we've been working with within the World Food Programme, Micro and Swiss Re, along with other partners, we've been looking at how to expand inclusive risk finance to this region, and we'll be delving into some of the experiences, especially in Guatemala, as to what we've been learning in some of the opportunities for risk finance in that country. So I'm just going to get our colleagues around the table to turn on their cameras. So I'm Kate Milliken. I'm the Regional Climate Change Advisor for the World Food Programme. And Andrea is our Regional Risk Finance Advisor as well. And we have Lena from Guatemala, who is the Country Manager for the Resilience Initiatives in the Guatemala Country Office. And Iker and Llabres from Micro is going to be joining us as well as Edgar Uribe from Swiss Re, and both Iker and Edgar have been working with us in Guatemala for our work on risk finance. Just a couple of housekeeping things. We're going to be very interested in hearing any feedback and questions coming from you all. So there's a chat function if you would like to submit your questions through the chat function. That would be fantastic. We'll give precedence to those messages first, and if we have any extra time at the end, then we'll open up the mic for follow-up questions. And then one other thing is we've enabled a caption for those who would have trouble following all of our different accents. So there's at the bottom of your screen, you should find a button called the live transcript, and that allows you to hide or unhide the subtitle or the captions that you should be able to see on your screen. So with that, I think we would get started, and we'll move to giving a bit of an overview first on what the World Food Programme has been looking at in terms of how to catalyze inclusive risk finance in the region through a strategy we've been working on for some time. And then we're going to be delving into the Guatemala case study. So I'm going to start a little bit on where we came from with why we are looking at inclusive risk finance in Latin America and the Caribbean. If we can move to the next slide. I'm not sure if it's, yep, okay, there we go. So it'll be myself and Andrea just giving you a quick walk through a strategy that we've been working on, and I'll just give a bit of a context as to why we felt it was important to establish a strategy across Latin America and the Caribbean. So WFP has been working in the region for decades, and we've noticed that there are quite a lot of challenges in the region. There is a high vulnerability within the region to extreme shocks and stresses that are, can have a negative impact on people's food security and reverse the development gains that countries have been making and communities have been making in improving their lives and livelihoods. There is also a challenge in financial inclusivity and the fact that particularly vulnerable and food insecure populations still have a limited access to financial services that can address their needs. And yet in this region, I mean, WFP works around the world, but in this region, we also have a middle income country context for many of our countries. And so if we can just move on to the next part of the slide. We do have some enablers within this context. The financial market, we do have more financial service providers that are quite active in the region. And policymakers are aware of the need for, more innovative risk finance initiatives and are trying to improve the regulatory framework as well. But I mean, there are still challenges, and one of the areas that we've identified is that there's still, a lack of innovative products that vulnerable clientele or food insecure populations can actually access. And so how do we enable those innovative products to be available to this clientele? There's also, we've identified from the private sector and insurance providers, et cetera, that there's a high cost potentially for research and development, and getting the delivery models in place for actually distributing insurance and other types of financial services. So that there's a challenge there, even if it's a perception in terms of cost that needs to be improved. And then another big challenge, and this is a global challenge overall that we're well aware of, is that there is a lack of examples of scalable and sustainable risk finance initiatives around the world, and that's something that we also experience in this region, but it's also something that we would like to look at in terms of opportunities. And that's where we came at with the strategy for the region, was to look at those opportunities. So the next slide, and to really try and understand how we could pivot off these opportunities in Latin America and the Caribbean, potentially even serving as a bit of a laboratory for testing how to scale sustainably such initiatives for other regions to learn from in the future as they move into a middle income country context. And so, I mean, one of the key opportunities for an organization like the World Food Programme is, we're targeting the vulnerable and food insecure populations, and we do see that financial inclusion can be really a very big benefit for enabling the building of their resilience and an ability to manage major shocks that they experience. And in terms of shocks, I mean, risk finance can be a very effective instrument to enable a rapid, efficient, and adequate financing of support to these populations when a disaster hits. So this is where we came from when we were thinking about how to consider what we could be doing in this arena, and we felt very strongly for WFP that there are certain aspects that we can also provide to this space in the risk finance arena. And one of the key interesting parts of this puzzle is that not all financial service providers have a clear understanding of vulnerable and food insecure population needs, so the clientele that we're trying to target here. And we have a number of tools, analysis and assessment tools, for example, that can help build that understanding. And then we also have a global experience in a range of risk finance solutions, from the micro to the meso to the macro, through initiatives such as our R4 Rural Resilience Initiative and the work we've been doing on the Africa risk capacity work and forecast-based financing. And we further felt that some of the entry points that an organization like the World Food Programme has been doing with governments and the private sector in the region offers really some interesting entry points for expanding out risk finance through our program activities, and so that we can enable more inclusion and a holistic approach with resilience and safety nets and social protection types of initiatives. And we've also got a bit of experience on cash-based transfers, which has a lot of synergies also with risk finance. And finally, I mean, one of the bigger factors is often we're in the position of facilitating discussions between communities, with the governments, and with private sector players. And so there's a role that could be played in facilitating public-private partnerships, which we think is a really core aspect to potentially scale and achieve a more sustainable delivery of these financial services to the most vulnerable in the future. So this was just where we came from when we were coming up with our work on risk finance. And I'm going to hand over to Andrea just to talk you through a little bit on the actual strategy and what we're aiming to achieve.
Thank you very much, Kate. Well, as you said, now that we have a clear idea on why this strategy was adopted, I would like to present you with some features of the strategy. And maybe I would like to highlight that, as you can see in this slide, the strategy really sets out an overall goal, which is to enhance the resilience of the region's most vulnerable and food insecure through integrating risk financing into sustainable and scalable policies, programs, and partnerships. And I really want to draw your attention on these two concepts that are here, which are sustainability and scalability, concepts that ultimately are at the core of the goal and are the foundations of the objectives of the strategy. So we can move on the next slide. We can see how these two concepts are really at the center of this goal. And then if we move to the next slide, we could see how they can really build up in the first objective, which precisely focuses on enabling the offer of inclusive risk financing instruments to vulnerable and food insecure populations, but at the same time, taking firm steps to institutionalize that offer in the mid and long term. So now, in order to do so, to achieve this first objective, WFP aims to actively design and implement risk financing instruments to support these populations. But at the same time, WFP is really interested in supporting the creation of an enabling environment so that the chances of institutionalization of these products and services that are going to be developed will be effectively institutionalized. So now, in respect of the second objective, which speaks to the role that WFP can play to advocate for governments and private sector players, you could see that effectively WFP is engaging constantly with these public and private partners to raise awareness about risk financing and building the risk financing capacity. So those are the two objectives. Now, if we can move to the guiding principles, as you can see, there are 5 guiding principles that have been adopted in order to ensure there is a common vision across the region for risk financing. So I will start maybe with the first guiding principle. So if we move to the next slide, this one relates with an encouragement to country offices to create or to clearly define or demarcate the target populations who will benefit from these risk financing instruments, and very importantly, to understand them in order to ensure that the risk financing instruments that will be offered to them really suit their needs and particularities. In this respect, a consumer-centric approach is really encouraged in order to map these needs and particularities of the target populations, to also understand the impact of the shocks and how these shocks impact their livelihood conditions. Also, very importantly, how they currently manage those risks, and very importantly, if these last mile target populations have access to financial services, which are very connected with the topic that we're talking today. So in that first principle, it's very important to note, and connecting with what Kate was saying before, that WFP has already a lot of experience with these communities, and also there is a wide range of tools that will really enable that understanding that is key. So that is the first principle. Now the second principle relates with the idea that risk financing is just a piece of the puzzle of disaster risk management, and very importantly, that no single financial instrument is optimal to respond to all shocks and risks. Therefore, this second principle really tells us that it's important to apply a risk layer approach to address the risk financing needs of vulnerable population. And this calls for the combination of different risk financing tools in a holistic way, but also this calls for a combination of risk financing instruments at the macro, meso, and micro level. So it's very important to really consider that principle in the implementation of the strategy. Then we have a third principle that relates with another point that Kate was mentioning, which is identifying which are the best entry points to integrate risk financing instruments in the programs, activities, and interventions of the WFP. So for those who are not familiar with the activities of WFP programs support governments in order to move forward with the social protection schemes. It offers a cash-based transfer to the most vulnerable when they need the most. The WFP also has programs providing smallholder farmer support, promoting community-based asset creation, providing climate services. So all these programs are good entry points to integrate risk financing instruments. And I think that we have a very interesting example already in other regions, which is R4 in Africa and in some countries already in Asia. Now, the fourth principle aims to encourage and advocate for enabling an appropriate environment and a strong public and private partnerships, which are key for the scale and sustainability components that I was highlighting before. And last but not least, the fifth principle speaks to the need to generate robust evidence and knowledge that effectively will support this fourth principle to advocate on risk financing, and also very important to really raise awareness about the need of investment and the convincing that is needed in order to bring funds from the government, the private sector, and donors to implement the strategy. So now I hand over to Lena, who will share with us the experience of Guatemala implementing risk financing tools. Thank you.
Thank you, Andrea. Yes, and as an upper middle income country, and at the same time a country that faces very serious challenges to food security and nutrition and is very vulnerable to a variety of climate related shocks, I think Guatemala is a very good example to show how we can put this risk finance strategy into practice at a country office level, right? So first of all, let me tell you a little bit about our general approach to resilience building here in Guatemala. We understand resilience as not only the fact that people are in situations of food security, but at the same time, they are sufficiently resilient to not fall directly into food insecurity when there are any kinds of shocks. So with this vision, for us, it's really important to have a very holistic and ecosystem approach, how we call it, to resilience building, where we work with different actors at different level. So not only as a humanitarian agency do we work directly with individuals and families to cover immediate needs and work with capacity building at the individual and household level, but at the same time, we work with actors at different levels. So specifically with communities, with social organizations, cooperatives, smallholder farmers associations, but at the same time with more regional actors, with municipalities and departments. So really a very layered approach, which has the aim to not only create resilience for the people themselves, but also to create a facilitating environment for people to keep building their resilience. So I think that's the first thing to take into account, which is very relevant for the whole risk finance approach that we have here. And the second component, which has been very important for us to formulate our strategy, is the experience that we have with smallholder farmers. So as a humanitarian agency, we have a lot of demand for food to distribute in emergency interventions. So for many years in Guatemala and many other countries, we've worked directly with smallholder farmers associations to not only provide technical assistance for them to increase their productivity, but at the same time to actually purchase food from those smallholder farmers associations. So we have lots of experience working with smallholder farmers. And I think one of the key points for us is that often the biggest risk that smallholder farmers perceive additional to climate-related shocks is the fact that often they do not have access to markets, and therefore their productive potential and their investments are often very, very limited because they do not know where to sell their products. And at the same time, many of these associations that we've been working with as WFP for over 10 years, with the support that we've been giving to these associations, they have quite a lot of experience with financial services, including access to credit, savings, and insurance in some cases. But something that we've observed as WFP is that especially the insurance products that existed in the market in Guatemala usually were not tailored to the specific needs of smallholder farmers, and therefore the experience have often been not too positive. So taking into account this this background, maybe let's move to the next slide. We have formulated a specific strategy, risk finance strategy for WFP in Guatemala. There you can see our office where I'm at right now. And I think the key here is that we've really been taking into account the risk layered approach. So the main goal of our risk finance strategy is that both the government, us as WFP, as well as vulnerable populations are more equipped with efficient financing capacities for climate risk management through contextualized, integrated and sustainable climate risk financing. So that's our main goal for the strategy that we have just formulated and that we're currently implementing for the next 4 years. And then we have 3 key objectives. So the first objective is specifically related to a microinsurance product that we have designed specifically tailored to the needs of smallholder farmers. And the first objectives and its activities are very much related to implement and make this microinsurance product work for the specific type of people that we work with as WFP. The second objective is directly related to the integration of this microinsurance product into existing programs and projects, not only for sustainability of the product itself, but also to really show that it's really important that insurance is only one part of the puzzle, right? So we need a holistic risk management approach in order for insurance to make sense and to really work for better risk management for smallholder farmers. And the third objective is directly related to this risk layered approach that my colleagues from the region were explaining. So yes, microinsurance for now is our priority for the immediate future. But at the same time, it's really important to connect this microinsurance approach with other risk finance instruments at a meso level and at a macro level, for example. So we're working actively to link this with other initiatives related to shock responsive social protection and related to forecast-based finance particularly. So moving to the next slide, we can see a few main characteristics of this microinsurance product that we have been designing in Guatemala and that we will pilot as WFP next year. So I think the key point here is to really take into account that it's been a consumer-centric approach. We've worked very closely with smallholder farmers through a very participatory methodology to, first of all, really identify their needs and the profile of these people and why they haven't had access to certain financial services in the past. So here in the circle, you can see some of the main characteristics that we've been taking into account for the design of the insurance product. For example, the lack of access to markets, low investment in productivity, the lack of diversified production, usually limited experience with and access to financial services, very limited disaster risk management means or even knowledge and capacities, and the key vulnerability in Guatemala to drought and excess rainfall. So taking into account these main characteristics, we've designed a very innovative solution. And some of the key characteristics are, first of all, that the insurance product and program is really integrated into other WFP interventions, which promote resilience and at the same time productivity of smallholder farmers, capacity building, technical assistance, etc. So the whole resilience package that we're implementing, really standardized and appropriate insured amounts for smallholder producers in order to be really relevant for this type of particular beneficiary profile. Thirdly, the logic of a business interruption coverage, which includes both agricultural and non-agricultural producers, so not only limit to one specific crop. Then very important to really promote financial empowerment and financial inclusion in a more holistic way. So to see how we can promote insurance, but at the same time facilitate access to other financial services and empower people to manage and understand these services. The key role of smallholder farmers associations, and to kind of see the risk both ways. So yes, we want to protect people with this insurance product from excess rain and from drought, but at the same time we have to communicate, distribute and implement it in a way that at the same time facilitates access to markets for smallholder farmers associations. So that's why we work directly with cooperatives and associations rather than individual farmers. Obviously, covering relevant risks for those smallholder farmers, which in our case is drought and excess rainfall. The fact that from the beginning we have a clear plan how to scale this insurance product and how to make it sustainable within value chains. So really to see, to have a mapping of different actors, who is interested in being insured, but also who in looking at value chains is interested that their suppliers, their food suppliers, for example, are insured, to really have this peace of mind of people who demand food at the same time. So to integrate this insurance product into existing value chains. One key aspect that we've been looking at is the distribution channel for this microinsurance product, because often traditional distribution channels such as banks or microfinance institutions for this particular profile of people are not, are sometimes not relevant. So we've designed a very specific approach where the smallholder farmers associations directly facilitate the administration and management of this smallholder of this microinsurance product. And lastly, very important, I think for this specific type of people, it's very important that the compensation when there is a shock and then when there is a payout for the insurance, it has to be as quickly as possible, because we're talking about people who are at risk of falling into food insecurity, and it has to be very, very transparent. So that's why it's an index-based or parametric insurance, relying on an index specifically designed for excess rainfall and drought. So with that, I'll hand over to Edgar, who will talk a bit more about the technical aspects of the index.
Thank you, Lena. So as Lena mentioned, we identified parametric insurance as a good solution for this program, basically because parametric insurance allows for fast payouts and it's relatively easy to implement for micro insurance producers, in terms that you don't need loss adjusters, unlike traditional insurance where you need an agent that will make adjustments on the field. In the case of parametric insurance, you don't need that. You can define whether there is going to be a payout based only on a variable. It can be a meteorological variable, for example, for hydrometeorological risks. And that's part of the reason that we decided to design, in collaboration with Micro, a parametric insurance that will cover two risks: drought and excess rainfall. And now, like I said, these parametric insurance products work based on an index or a meteorological variable. And then you need a database to operate these products. And the database that we decided to use is ERA5. In the past, people have used, for example, meteorological or weather stations, but ERA5 is a really nice product. It's available all over the world and is created by the European Center for Medium Range Weather Forecast. So, and this database is created taking into account all measurements available, including weather stations and satellites, for example. So this is a really good database, and that's the database that we decided to use to design and then to operate this covers. I can tell you a little bit of the characteristics of this database. We have daily data starting in 1979. It has tens of variables, including rainfall, but it has many other variables like temperature, humidity, pressure, so many other variables. Like I say, the pixel size is around 25 kilometers. And another very nice feature for this database is that the data is available after 5 days. So basically, if we were to calculate losses using this database, it will only take 5 days to get the information to make the calculations. And like we have been using this database in Swiss Re for many products, and we consider it's an excellent database. So that's the database that we are going to use for both covers, excess rainfall and drought. And I'm going to tell you a little bit about those two covers. But before that, I'm going to ask Iker to tell you a little bit about these two hazards, drought and excess rainfall.
Thank you, Edgar.
Yep.
Thank you, Edgar. And we also included information for those of you that are interested in the data sources of the secondary or the backup source. So you will be able to see that in the recording or in the materials. So let's talk about a bit about drought in Guatemala. As Lena mentioned, well, we all mentioned before in the presentation, it's very important to design this cover based on the needs of the customer. So when we talk about drought is has many different manifestations, and it impacts differently, for example, high-income producers and smallholder farmers. A producer with many hectares, for instance, might have an irrigation system and might be more affected by hydrological drought, that is, if the river runs dry. However, a smallholder farmer relies on rain, and therefore his or her whole community also relies on that rainfall in order to sustain a minimum level of production and a minimum level of economic activity. Therefore, we identify what happens in Guatemala when we call this a dry year. And meteorological drought in Guatemala has the following characteristics. First, it depends on the duration of a dry spell, what we call veranillo or canicula, that is a couple of weeks in between the rainy season that can prolong and therefore cause damage in between the growing season of many different agricultural products. Second, it's more of the distribution of rainfall during that season than the actual amount of total rainfall in the whole year, right? So it's more important, all of us that have gardens or that have plants at home know that it's more important to put some water in the plant each day than to have the plant flooded once a month or every 2 weeks and then not water it in the rest of the period. So distribution is very important. And then there are also two other factors, which is air temperature and the early end of the rainy season. The crucial period of coverage of our drought index is from May to October. And this is very important because there's a type of drought that is called seasonal drought, and that is one that you will experience every year. Every year from November to April, the country is dry. It doesn't rain, or it rains very little. So it would be nonsense to include drought coverage in those months if it focuses specifically on on lack of rainfall. Well, finally, you can see in this map on the right that it is the dry corridor and the population that we're targeting, one of the area that lives in one of the areas that is the most exposed to drought, not only in the country, but all over Central America. Okay, back to you, Edgar.
So I'm going to tell you a little bit about the cover we designed. Traditionally, most drought covers are based on the cumulative rainfall during a period. But as Iker explained, we realized through our analysis of the region that the most important factor here is not the amount, but also the distribution. So we decided to change the approach, and instead of using cumulative water during May to October in this case, we decided to create a different index, which is basically the number of dry days during the period that we are covering. We create a window, and you will see an animation on your right side. And what we are going to do is create a window, and for that window, we are going to count the number of dry days. And we will establish a trigger of number of dry days. If at some point the trigger is, or the number of dry days exceeds the trigger, we will issue a payout. But we are going to do this every single day. We are going to be rolling the windows of time. Let's say, for example, we can choose a window of 40 or 50 days, and we will count the number of dry days in that window. Then we will go to the next day, and we will count the number of dry days, and so on and so forth. And Iker, can you please click on the animation maybe? Yeah, so that, for example, could be the first window, and we will be for the next day and counting the number of dry days for each day and window. And if at some point the number of dry days exceeds the trigger, it is then when we are going to issue a payout. And another nice feature about this index is that, for example, at some point, or in this example, it is triggering a level 1 payout, but we will continue doing the analysis. And if at some point it exceeds the level 2 payout, we will issue the difference between the level 1 payout and the level 2 payout. In other words, we will be monitoring the index. If at some point it detonates a payout of level 1, we will issue immediately a payout to the farmer so he can receive the money as fast as possible. And then if the drought worsens and the trigger level 2 is detonated, then we'll issue the rest of the payout to compensate for a level 2 payout. And that's basically the approach that we follow to design this cover. And now I'm going to ask Iker to tell you a little bit about excess rainfall in the region.
Excellent. Thank you, Edgar. We had a lot of fun designing that and drought index. Now let's talk a bit about excess rainfall, because I think we all saw in the news what happened this year with Amanda, Storm, Cristobal in Guatemala, and Eta also hitting Guatemala at the very end of the season. Iota hitting mainly Nicaragua and Honduras. So we all know that excess rainfall is a relevant risk, and this is very important for the coverage. But how does excess rainfall behave in Guatemala? Because we're not talking about the same type of rainfall in each part of the country, and not even in other countries, right? So mainly in Guatemala, we're referring to tropical cyclones, rainfall that falls because of tropical cyclones even if they don't reach the level of a hurricane. We all know that that scale, the Saffir-Simpson, is based on wind speed. But here, since we're looking at amount of rainfall in millimeters, we are interested also in systems that are tropical depressions or storms. For example, even though Hurricane Eta reached a Hurricane 4 category, it caused a lot of damage in Guatemala only as a tropical depression. So it was not the wind, but rather the amount of rainfall and the floods and landslides related to that rainfall. So here you can see a map of all the tropical cyclones that have passed through Guatemala or within 50 kilometers. And also the losses that I was referring to, the events that we have had this year. But if we go back in time, we can also remember other events such as Agatha in 2010, Stan in 2005, or Hurricane Mitch in 1998. So back to you, Edgar. He'll explain the index we designed for excess rainfall.
Thank you, Iker. So relative to the excess rainfall cover, we decided to go with a traditional index. Traditionally, the excess rainfall covers are usually cumulative rainfall within 3 or 2 to 4 days. And in this case, we decided to use that same index. We have tested it in many different products. So we didn't see any reason to change it. And that's the index we used. What it does is basically that for 1 day or for the cover window that we have for this product, we will be accumulating rainfall for the period of 2 to 4 days, and we will be doing that every single day. And if at some point the cumulative rainfall exceeds the trigger, then we are going to issue a payout. And we have, like in drought, we also have 3 different levels or magnitudes. And the more extreme is the rainfall, the highest is the payout, to a point where the insured will receive 100% of the sum insured. And at low levels, like level 1, it will receive a small amount, which is basically that the payout is proportional to the magnitude of the event. And I think, like I said, this product has been used extensively in many other regions. So that's the index we use for excess rainfall.
Great, so we'll go back to you, Kate, and to the audience for some questions and answers.
Wonderful, and thank you very much. Actually very interesting to hear a bit more of the detail of what you guys are doing in Guatemala. So I'm going to turn straight across to some questions. I was going to call upon Lena, but she has to run out now on some questions around gender. But I think if Andrea, you wouldn't mind coming in, it's not just on gender, but on Indigenous populations and disadvantaged groups overall. You would have perhaps a bit of a response on that alongside what we've been experiencing or seeing in Guatemala based on the gender sensitive approaches we've been adopting there. So over to you if you don't mind.
Sure, thank you, Kate. Well, maybe I will start answering the question from the regional side, because precisely principle 1 really speaks on like the need of adopting a consumer-centric approach where you really map the needs of the segments you want to benefit with these solutions. And we're not talking about a homogeneous segment. We're talking about specific groups who require specific analysis and solutions. So in that particular case, the strategy is very clear in saying that a gender approach, a specific gender approach, and also an approach focusing on indigenous communities needs to be adopted. So we have to really go deep down in mapping their needs and how to manage the risks in order to offer something that is valuable. And maybe I will bring the case of Guatemala as an example, because we have looking at different ways on how to mainstream the gender issue, for instance, by making sure that during the mapping analysis of needs and particularities, gender, women have a specific focus. And also something very important is like demarcating how women, for instance, manage their risks and try to piggyback on what is currently being done. So I mentioned in the chat savings groups. So in Guatemala, we have mapped that most of the savings groups in the associations are managed by women. So this is where we really want to bring that into attention, and also the delivery of the product. Most of women in Guatemala do not have access to credit or access to land. So it would be very complicated to design an insurance product that is linked with loans or with the land tenure. So that also inspired like the way how the product is delivered. And maybe just to finish as well, the financial education program is not just like one block for everyone, but it really relates with each particular segment with their own needs, their own languages and particularities. Thank you.
Thank you. Thanks, Andrea. And yeah, I think actually just in the general focus that WFP provides, you know, to ensure we're supporting the most vulnerable and food insecure, gender becomes a very core focus for us. We've got a number of tools that we use to look at, you know, gender empowerment and ensuring that we really understand the needs of women, and those have been actually further enhanced in Guatemala to make sure that we can really understand the design. So we've had some interesting outcomes coming out, even with some, you know, more spontaneous results with women's groups and the positive empowerment even out of COVID that we've seen with some of these savings groups. So it's been quite positive actually to see what some of this work can even evolve into. I'm going to turn to Edgar next, because there was a question posed to him on whether the databases consider variables such as social and economic vulnerability of population groups, or whether we're just looking at threats. So maybe over to you if you would like to respond on that.
Yeah, well, basically when we design an index cover, we just need we just used a meteorological variable for the operation of the cover. But during the design phase, when we define the trigger levels, we do use information from the farmers. We try to make sure that the levels that we define to issue a payout, the triggers, values, are in close relation with the damages that the farmers are suffering. So in this case, in the design phase, we did use some information from the regions. We use a database or historical database of damages, and based on that information, we define the values of the triggers. And I do not remember exactly the names of the databases, but I think Iker can tell you a little bit more about those databases. But yes, we do use that information in order to define the trigger values. But once the trigger values are defined, we do not use vulnerability information anymore.
Exactly. No, and just very briefly, it's worked in parallel, right? All the vulnerability and social and economic variables with the weather data. So they are worked in parallel, and the idea of the design process is that they are correlated, right? It's not the same database that includes both, but we in the design process correlate those, and then that's how we are able to choose objectively at a technical level both the data source and the index.
No, thank you. It's a fantastic question, because we've been looking at this across the region in terms of the design of these types of instruments, and you know, the socioeconomic food security vulnerability aspect is something that's really core as part of the analysis, and even in the livelihoods that are climate vulnerable. You know, these are important considerations with the initial design of whatever instruments we're looking at here. I'm going to
Sorry,
pass back.
just
Yes.
to complement, because it's related to this question,
Yeah.
Hector just asked about calibrating the triggers for which type of events, right? So it's large magnitude and of course large severity, and that would mean a low frequency, right? Just like in insurance products in general.
Perfect, and that's actually a lovely segue into the next question that's been posed, and I'm going to pass back to Andrea on it, because I mean there are different financial instruments that are better for more high frequency, less severe events over those that are less frequent and more severe. So perhaps Andrea, you were asked a question around the risk layering, and if I could just hand back to you to respond on the question about how Guatemala is approaching that. Thanks.
Sure. Well, about this topic, I maybe would like to start answering the question with the fact that, for instance, World Food Program is supporting ARC, and there is a model that probably you will know that is ARC Replica, where actually the World Food Program is really trying to mirror that policy that is purchased by the government, and like find like a kind of a way of enhancing that kind of protection that the government is receiving, and therefore supporting the most vulnerable to receive a benefit that might be delivered in an indirect way. So in the case of Guatemala, and let's say in Latin America and the Caribbean in general, we are exploring these kind of options or similar options in order to see how, for instance, in the context of CRIF, where countries like Guatemala is part of, and who just benefit from a payout recently for the Storm, we could do something similar or closely related to that. So that's one element that we are exploring in order to answer the question of Patricia. And the second point of the question of Patricia, I think that relates as well on how to make sure that those who are the most vulnerable really receive the benefits of that. And I think that to answer that question, I will bring like two key elements that WFP provides. WFP has like a lot of financial service providers in each country in order to precisely ensure the delivery of cash-based transfers. And these kind of partnerships are extremely helpful precisely to make sure that those who need the most receive the money when it is effectively needed. So there is a nice mapping of financial service providers already there, and technology plays a big role on this. So for instance, in the case of El Salvador, another country where we're working on, the associations are not as strong as they are in Guatemala. And we're looking at different ways to deliver this type of solution. So there is a strong process of remittances in El Salvador, and we're looking at ways on how technology can confront this obstacle and make sure that those who might be benefiting of this type of solution, something similar of what has been presented today, could effectively receive the payouts when they need them the most. Thanks.
Wonderful. I think we're right on the edge of time, and I'm not sure if we're going to be kicked out of our session shortly. There was one final question on if there's, why there's a lack of market access. I assume that's related to financial services, and if that's due to the policy environment or quality of products. I don't know if anyone would like to couch on that.
I was just typing an answer to that question. Thanks, Kate.
Okay, perfect.
I think it's not a matter of lack of quality, but actually a lack of quantity. I think there's less than 5 agricultural insurance products in the market in Guatemala, and I would say that all of them before this one, before the products that we have designed are for large producers, so large sugarcane producers, and it's products that are really thought for a producer that can have an inspection and in which the costs will dilute, right? So I think it's not so much a matter of quality, but quantity, and designing a product and someone interested in the design of a product for this market. And that's why the WFP's role is so important, not only because of the knowledge they have of the market, but also because of the strategic objectives of the organization.
Yeah, no, I think that the challenge we've discovered at the very local last mile level is that there just is that lack of products that are available, that are affordable, and that are appropriate for vulnerable and food insecure populations. And so, you know, we've got to enhance that. I don't know if Andrea, you would want to come in as well. I mean, you, even from the regulatory perspective or wider. I mean, for me, it can be a whole host of issues, and each country is different. But yeah, please go ahead, Andrea.
Yeah, no, thank you, Kate. Yeah, I think that it's important to see different blocks. There are supply barriers, there are demand barriers, regulatory barriers, policy barriers, and each country is completely different in that sense. So I think that like an important message is like there is no single answer. What we need to do is every time that we go to a country, we need to find out which are those barriers and try to find innovative solutions to confront those. So I would say it really depends, but it could be a mix of all of them.
Yes, no, thanks. And I mean, I think segueing back to, you know, the strategy and how we came up with it for the World Food Programme is it's not prescriptive. It's just trying to look at each country context and provide guiding principles on how we can get to a common vision towards inclusive risk finance for the most vulnerable and food insecure. So, you know, each country is going to be different, and we're working to try and ensure that we've got that wider vision to go for. But no, thank you everyone. We're certainly, I'm sure, out of time now, but it's been wonderful to have you all aboard, and we are welcoming any questions that you may have, and we should be able to share any information you would wish to find out more. And thank you for all the panelists for the great discussion today. I think it was a really interesting session, so thanks to everyone.
Thanks to the WFP for putting this together, and thank you all for participating.
Thank you.
Thank you.
Thanks so much.
Bye-bye.
Bye.